Video is going to outline a little bit about how you put together this master business plan. So this is a detailed master business plan. We have a more basic one that I'll review in a second video. So with the master business plan file, the first thing that you're going to want to do is complete the budget. So this is going to be kind of your overview of the whole business. So the way I've made this master business plan file is for a $1 million business. So this section here is your revenue goal. So you put in what is your revenue goal. And then here is going to be your variable expenses. So these are expenses that vary and correlate perfectly with revenue. So for our production manager, we assume 5.5% to production management. So depending on how you're paying your production manager would determine this percentage. So if you're paying them 5%, it would be 5. If you're paying them 6, it would be 6. If you're paying them some kind of compensation plan with a salary and bonuses, you want to make sure that the compensation plan is structured in a way that it always ends up to be a certain percentage. So this should be a pretty specific percent. So you put that in there. Subcontractors, so we plan to pay 50%, but we hedge ourselves a little. We know that there might be some overages occasionally, so we budget a little more than 50%. Maybe you're planning to pay 55%, so that would determine that. Workers' comp and insurance burden, so I put 2% for workers' comp. Material, so this is for like test samples and stuff like that. And then sales commissions, again, whatever percentage you're paying to sales commissions. So this gives you your gross profit. So this is your profit on a job before overhead. Down below we have all overhead. So these are different line items you can fill out if you have any of this stuff, but we don't have a vehicle. We have a vehicle, but we paid in full. And we have these things paid for somewhere else. So we have bank fees, liability insurance, bookkeeping. So this is liability insurance up here. This is just workers' comp, actually. So our liability insurance is here. Bookkeeping, payroll processing, professional fees, that's like our annual tax fee. Our office expense if you have one, utilities for that office supplies, that'd be like flyers. Flyers could be included in there, lead sheets, contracts, all that kind of stuff. Meals and entertainment if you take your team out for meals, your warranty work, recruitment, so posting on Craigslist, Indeed, ZipRecruiter, cell phones if you reimburse cell phones, payment processing, so the fee for credit card transactions, clothing. So then this gets into all your marketing expenses. So you want to make sure that you budget for your marketing expenses, and these numbers should be the marketing you'll have to spend to generate the revenue goal. So, for us, if we spend $20,000 on door-to-door marketing, we would assume that would generate $600,000 in business. To be safe, we could say $500,000. Thumbtack, $2,500. Well, we could probably say that's going to generate about $50,000. Maybe, be safe, $40,000. And then Craftsjack, maybe we say that's going to generate about $50,000. BBB, say it generates maybe $20,000. And so on. And then maybe you get 10 grand a month from your website, so maybe that's 120,000. Painter Choice, maybe another 60,000. Other e-marketing, that should bring in about another 80,000. Signs, lawn signs, new marketing testing, that should bring in another like 50,000. So right here, if we add all this up, we would say, okay, so we've got 920,000, so we're pretty darn close. And then you'll need to adjust throughout the year. So these could fluctuate a little. If you want, you could just bump this up and say 15,000, so you got plenty of margin. All right, now down here, this will add up. So your net profit, if you ran the business this way, you would have a production manager producing everything, salespeople selling everything. You would have $60,000 in marketing to spend, and you would make $237,000 in profit. So this is the first thing you fill out. So you fill that out, and then throughout the year, you're going to fill out your overhead tracking every month. So this is everything below this line. Everything below this line gets filled out here on a monthly basis. All right, so you've got January in the top line, February, and that'll total that up, and it'll put it in your actual numbers over here. So all these actuals for this year will get populated here. Now all of these numbers here get populated by the job cost card. So every time a job gets produced, you put in the name of the client, you put in the job size of the client, you put in the percent you paid to production management, then you put in how much you paid to your subcontractors, if you bought any materials for the job, maybe $36 test samples, and if there was a sales commission, which we're going to say there was 7% sales commission. So we can see on this job we made 34% gross profit. All right, so that, and then that populates here. See, 3,000, these are all those numbers. So that's going to populate that for you. Okay, so let's get those out. Okay, so that's those 3 sheets. Now the next thing is, how do we actually get to $1 million? Well, we need to sell it. So that's the sales plan. So you fill in the sales goal, your average job size, and your slippage. So this is like, how many leads do I need to get to do an estimate? You know, that'll, excuse me, that'll calculate a lot of this. So then over here, so you basically for this plan, you just have to fill out the green boxes, green, 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 and then come over here and you fill out how much of your total sales has been sold by the end of the first quarter, and what was your sales rate, what was your closing rate, and then to here. And so in this projection, you'll see you need to sell 16,000 a week for the first quarter, and then you bump it up and you start selling 23,000 a week for the next quarter, and then 26,000 a week for the next quarter, and then the last quarter we do 19,000 a week. But you probably won't sell these last 4 weeks, so we just need to sell a little bit more in these weeks. This will also calculate how many leads per week you need, 37 leads, 19 estimates. And so this is based on your slippage rate. So if you're using all lead services and your conversion rate is 70%, then you would only need 28 leads a week. But the point is, you need to do 19 estimates a week for the first quarter, 26 a week for the second quarter, 30 a week for the third quarter, and that is based on your average job size and your sales rate. So if we change the sales rate, and let's say you sell 40% of your estimates, and let's say your average job size is 4,000, now you only need to do 10 estimates a week. All right, so these numbers will adjust all that for you. Okay, so that's the sales plan, so you can map that out, and then every week you want to fill in what your actual numbers were, and every week you fill out your actual job cost cards, and then finally the production plan. So same thing here, you fill out the green boxes. All right, and then you want to just check. So based on this $60 per hour, you can leave that one. That's going to be pretty accurate for you. So that's more if you use employees. Since we're talking mostly about using subs, it's not as relevant. So $1 million in production, 7% is done at the end of the first quarter because there's not a lot of production happens. So 5,800 in production a week. Then in the second quarter, we jump up to 21,000, then 30,000, then back to 23,000. And then again, right here is where you fill it in. So what did we actually produce? Well, we did 7,000 that week, 0 that week, 9,400 that week, 4,000 that week. And you fill in your production, and it will total how much you should be at, how much you're actually at, and you'll see it. So this is how you track to make sure you're on track with sales, on track with production, on track with profit, on track with profit. This is the total. Here's a schedule I make. So this document pulls in what you should total have booked, your weekly sales, your weekly production, and what you total should have produced. So what I like to do here is I like to say marketing. Oh, that's why that's not working. Let's go like this. So marketing plan. So right here I would put in like, well, we need 19 estimates per week. So lead services, door to door. Right? So I put in the game plan there. So this is like hire, maybe it's personally do sales, because you're going to sell that. And then right around here, it's maybe like hire sales rep, and so you're going to hire your first sales rep. And maybe over here, it's like hire a production manager. So you can kind of map out based on where your business should be, the most important things you need to be doing throughout the year. So that's that. And then your dashboard, this is kind of where you can see it all. So this all pulls numbers in. So when you fill out the actuals, those will get pulled in. These all get pulled in. So you can just see in one snapshot kind of your whole business. You can set a couple goals, so this is a primary goal, actions, to hit it, secondary goal, and actions to hit. So this kind of will guide, what you're doing. You want to have 2 main focuses every 2 weeks. And so that's what this is. So that's how you use your master business plan. Take some time, fill this out well, and then what will happen is once you have actual numbers for 2018, then those numbers will go into here and give you a good baseline for how to create even more accurate projections the next year. So that's that. Hope it helps.